GM, and I featured this a few times on this show. You can see that GM, ever since about July 11th of last year, so a little bit over a year, they've been in this sideways channel, channeling between about $30 and $40 a share. Now, I remember when I was part of the higher management at Hewlett Packard, I would sit in on meetings, and Hewlett Packard, they would actually, strategize their earning. They actually had people that they employed. When you're a bigger company, you actually have people that you employ that helps you craft your earnings announcement, right? You don't just release earnings and speak off the cuff. Everything is quite strategic. And it was intentional at Hewlett Packard what was said because they wanted to keep their stock price in a certain range, right? And so I would imagine General Motors being much larger than a Hewlett Packard, that they do this strategy as well. And so I feel like the company itself is very happy with their stock price in between 30 and $40. They keep their investors happy, both with issuing a dividend, and they keep enough money floating around in their company, which is the original reason why companies are listed on the stock market, is to find a broad swath of investors. They keep enough money in their coffers to keep the company going at a pretty nice pace. So with that said, let's bring us back into the current. I'm going to zoom in here to maybe a 3-month chart. You can see here that there's about to be a dividend issued for anybody who's owned the stock for a while now. But you can see that GM is coming down here at around the $33 mark, and I've listed that as a potential line of support. And if I throw some of my lagging indicators in place, one of my favorite is this fast MACD. You can see a couple of days ago, I got a crossing of the fast MACD line over the MACD difference or divergence line. And so I've been looking for opportunity. Now, I've already got GM in my portfolio. So there's a couple things you can do when a bottom is found in a sideways choppy market. First of all, you can add more stock, do some dollar cost averaging and add more to your position, or you can set up an initial position. And so I'm planning on doing some of that. And for options, if you want to be able to use options, you have to do everything in lots of 100. So if you're going to buy some stock, buy it in increments of 100. If you're going to do some option trades, realize that a option contract is actually 100 option shares. In the markets, everything is traded in lots of 100. So if you're instead of buying the GM stock, and I like having the GM stock in my portfolio for the long term, but instead of buying that, an alternative would be to find some deep in the money, far out in time. And I'm talking about going at least April 2024 or farther out, and go very deep in the money. That would create a very good substitute to the stock. And you could buy that for a cheaper price than buying the shares of stock. So if you wanted to do that instead, I could see you doing that at a bottom as well. So setting up an initial position, and or you could dollar cost average add to your initial position. If you were short GM, maybe when GM was at a higher price, closer to $41, you shorted GM. Now would be the time to sell some GM premium, right? So we sell covered puts. If you shorted the stock, or if you bought some put substitutes, you could now sell put options and create your income stream. So this would be a good time to do that. If you did that, I would also offset it by buying some protective call options. Those would be options that we buy that are about 6 months out. So January, February timeframe for their expiration. And I would use out of the money options. So I would probably use like a 40, 41, 42 strike price. Finally, the other thing you could do is you could actually, not finally, I've got two more things you can do. You could be rolling out of protective calls right now. So, I'm sorry, out of protective puts right now. So if you had already bought some protective puts, now would be the time to roll out of them. That means sell them back at hopefully a break even or a profit, and get ready to buy some newer ones at a future signal. And finally, if you wanted to, this would be also a good time to use naked put strategy, a cash secured put strategy to buy some GM stock on your terms. So all of those different things could be done right now on GM. And if you're new to the GM stock, or you haven't actually planned out a good trade on GM, like we've talked about in previous shows, this is a great time to start paper trading GM to kind of get a feel of how GM moves. But this is great timing. I'm waiting for the good signal. I thought maybe I got a good signal about Wednesday, three trading days ago on Wednesday, but it didn't pan out. So I'm still every day I've been looking for the best opportunity. I've been I call them follow through rules, Sip. I look for during the trading day for some simple rules to be met. And if so, I go for the position. And so far, I get to the end of every trading day and those rules are not met. And therefore, my order isn't ever put in place. But if those rules are met, I'm going to be dollar cost averaging, buying some more of that stock right now.